And today is December 19th, 2014. The market just went yellow, and this is a special video for our Market Club and Genius Society members. And we just are talking about a yellow market, which means you can hedge on the upside and the downside. We're giving you NXPI today on the upside, and on the downside, of course, Amazon keeps rearing its ugly head, so we can't ignore it. Notice this chart with all the red on the weekly chart. Tons of it here as the stock had a lot of energy, went down, tried to peak but couldn't make a higher high, and is now forming this head and shoulders pattern. Let me draw that in for you. And so you see that there's the head and there's the first shoulder right there. It's hard to see with the drawings that I have. And here's a second shoulder right in there. And so we have a neckline that is basically, if we go shoulder to shoulder, it's a slightly increasing neckline. And wow, isn't that funny how it just kind of hit that neckline right there? I didn't even realize that as I was drawing it. And it came right back down. And it's coming down with some energy, not a lot, but this week it's got a lot of energy. So you can see that right now it's coming down. It came down through this Fibonacci level, which is the point, let's see, 23.6 Fibonacci. And it's going to try to test, we think, if this trend continues, and we're trend traders, it's going to test this 283 level. Now, here's the deal. If it breaks through that 283 level, and it does it with this kind of volume that it had when it came down to that level in the first place, which is, let's see if we can get you the volume, it's 38.7 million shares. And if it comes down maybe next week or the week after that on 38.7 million shares or more, it's going to be heading down to this 261 level, or this kind of Fibonacci confluence level, which we already drew in October, which is about $245 to $255. So anyway, there's a target price that's right in this area here that we see Amazon going to if the market remains weak. And it's yellow, and it's kind of trending up right now, but it could turn back to a red market at any time, or it could go higher, which is why we hedge. We've got one strong stock going higher, and we've got one weak stock that we think is going lower. So hopefully they outperform the market in either direction on either side, if that makes sense. Let's take a look at the daily real quick, and you'll see what I'm talking about with the volume. So look at the preponderance of red right here. Just a lot of selling. So every time it went up, it got sold. It went up, got sold, and went up, and then it got sold again. But now it's bouncing into that 10-week moving average right here, that 50-day moving average. So it bounced off of that. It may try to go up there and make that hit against one more time at 310. But if the market is weak, it's in a sweet spot here, and we think it's going to continue to go down. Notice on these selling days, there's a lot more selling than there is on these buying days. See, the buying days are all really low, but the selling days are really high. That's not good for the stock. The Genius indicator also is showing right now at a negative. It's dropped below the zero line, but it is coming up. So we have to look at that. But the relative strength against the market is really down, and that portends a lot of things for us. So primarily with the parabolic SAR being down, relative strength being down, the Genius indicator being down, but coming up, and these higher volume sell-offs, we have the preponderance of the data and the probabilities on the side of the shorts continuing to win, especially if the market gets a little bit weaker. So that's Amazon. Put that in conjunction with your NXPI on the upside, and you've got a really nice hedge.